If you're an Australian senior relying on Centrelink payments or navigating the aged care system, stop what you're doing for just a moment. February has brought important updates that could directly affect your age pension, your supplements, your reporting obligations, and even how much you might pay for aged care services. Missing one small detail could mean delayed payments, unexpected deductions, or confusion about your entitlements. Today, we're breaking everything down clearly, simply, and step by step, so you know exactly where you stand. Welcome back to Centrelink Compass AU, your trusted guide to understanding Australia's pension, benefits, and aged care changes without the complicated jargon. If you're new here, this channel is dedicated to helping seniors and their families stay informed, confident, and financially secure.
Let's start with the age pension. The age pension, paid through Services Australia under the broader umbrella of Centrelink, remains the primary income support payment for millions of older Australians. February updates often focus on payment processing schedules, income reporting reminders, compliance checks, and adjustments linked to cost of living measures. One of the most important reminders this February is around payment timing. While base rates are indexed in March and September each year, February is typically when administrative updates are communicated. Seniors should ensure their bank details, contact information, and income details are accurate in their MyGov account linked to Centrelink. Even a small, outdated detail can delay a payment cycle.
If you receive the full age pension, you are generally not affected by income fluctuations. However, if you receive a part pension, your payment is directly impacted by your income and assets. February is a key time when Centrelink conducts ongoing data matching. This includes income from employment, superannuation account-based pensions, rental income, and financial investments. Speaking of income, remember that the income test and assets test both apply, and Centrelink will pay you under whichever test results in the lower payment. If your assets have increased recently due to property revaluation, inheritance, or savings growth, your pension rate may be reassessed. It's important to report significant changes within 14 days to avoid overpayments.
Now let's talk about the work bonus. The work bonus allows eligible pensioners to earn income from employment without it fully counting toward the income test. If you're still working part-time, February is a good month to check your work bonus balance. Unused amounts accumulate up to a cap, and many seniors don't realize they have a buffer that protects some of their employment income from reducing their pension. Another key area this February is deeming rates. Deeming assumes your financial investments earn a certain rate of return, regardless of what you actually earn. If your savings are sitting in a low-interest account, you may still be assessed at the deeming rate. While changes to deeming rates don't happen every month, February often brings renewed attention to how they affect pension calculations. Cost of living pressures continue to affect seniors across Australia. While the main pension indexation occurs in March, February is when many households begin preparing for changes in utility bills, insurance premiums, and council rates. Remember that pensioners may be eligible for additional supplements, including the pension supplement and energy supplement, which are automatically included in most age pension payments. If you receive rent assistance, make sure your rent details are current. Any increase in rent must be reported so that your rent assistance can be recalculated. Failing to report a rent increase means you could miss out on additional support you're entitled to. Now let's shift to aged care. Australia's aged care system is undergoing significant reforms designed to improve transparency, quality, and accountability. Whether you're receiving home care services or considering residential aged care, February updates often focus on compliance and fee clarity. If you're accessing support through the Home Care Packages program, your package level determines the funding you receive. There are 4 levels ranging from basic care needs to high-level care needs. The government subsidy covers most of the cost, but depending on your income, you may be asked to contribute an income-tested care fee. This fee is assessed by Services Australia. If your income has changed, your contribution amount could change as well. February is a good time to review your income assessment notice to ensure everything is correct. For seniors entering residential aged care, understanding fees is critical. You may encounter a basic daily fee, a means-tested care fee, and accommodation payments. Accommodation can be paid as a refundable accommodation deposit or a daily accommodation payment, depending on your financial situation. It's important to note that the aged care means test is separate from the age pension means test, although they share similar financial information. Changes to your assets or income can impact both systems differently. Another February reminder involves annual and lifetime caps on aged care fees. There are limits to how much you can be required to pay in means-tested care fees over your lifetime. If you're approaching those caps, you should confirm your current balance with Services Australia to avoid confusion. Let's talk about home support services. Many seniors receive help through entry-level programs before moving to a full home care package. If you're receiving basic support, such as cleaning, transport, or meal assistance, make sure your contact information and service agreements are up to date. Providers are increasingly required to demonstrate transparency in pricing and service delivery. Now, what should you actually do this February? First, log into your MyGov account and review your linked Centrelink details. Check your income reporting, your bank account details, and any pending tasks. Second, review any letters or digital messages sent to you. Many seniors ignore online notices, assuming they are routine, but some may require action. Third, if you're considering changes to your financial situation, such as gifting money to family, selling property, or drawing down superannuation, seek financial advice. These decisions can affect both your pension and aged care contributions. Let's also address travel. If you're planning to travel overseas, even temporarily, you must notify Centrelink. The age pension can be affected by extended absences from Australia. Payment portability rules determine how long you can be overseas before your rate changes. For carers and family members watching this video, encourage your loved ones to keep records organized. Having clear documentation of income, assets, and correspondence can prevent stress during reviews or reassessments. Scams targeting seniors remain a serious issue. February often sees increased scam activity around tax time preparation and government payments. Remember that Centrelink will never ask for personal information via unsolicited phone calls or suspicious links. If in doubt, contact Services Australia directly through official channels. Now let's talk about financial well-being. The age pension is designed as a safety net, not necessarily a complete income replacement. Budgeting carefully and understanding your entitlements can stretch your payments further. Concession cards linked to the age pension provide access to discounted medicines, medical services, utilities, and transport. If you hold a pensioner concession card, make sure you're using all available state and territory concessions. These vary depending on where you live in Australia, but they can significantly reduce household expenses. Another key reminder this February is to prepare for the upcoming March indexation. While February itself may not change the base rate, understanding how indexation works helps you anticipate potential increases. The pension is adjusted based on inflation and wage benchmarks to maintain purchasing power. Let's quickly recap the most important February actions. Check your Centrelink details. Report any income or asset changes. Review aged care fee assessments. Stay alert for scams. Prepare for upcoming indexation. And seek advice before making major financial decisions. Knowledge is power, especially when it comes to government payments. Staying informed ensures you receive everything you're entitled to and avoid costly mistakes. At Centrelink Compass AU, our goal is simple: to guide Australian seniors through every update, every rule change, and every payment shift with clarity and confidence.
If this breakdown helped you understand the February Centrelink update for seniors and how it affects your age pension and aged care arrangements, make sure to like this video and share it with someone who might need it. Comment below and let us know what topics you'd like us to explain next. Are you concerned about pension increases, aged care reforms, or overseas travel rules? Your questions help shape future videos. Thank you for spending your time with Centrelink Compass AU. Stay informed, stay prepared, and most importantly, stay confident about your financial future. We'll see you in the next update.